imports anyways, but 3% is, well, that's still money, right? Going to Russia. On the margin, what does 3% or whatever the general range is of U.S. imports from Russian oil, what does that do on the margin if indeed that is cut out?
Yeah, absolutely. We're talking about still with 3%, but it's still a significant amount of oil that is coming in. More importantly, Russian petroleum products, so crude oil and petroleum products, imports last year jumped 24% of Russian oil and gasoline and so forth coming to the United States to a record 245 million barrels. So last year, the United States imported 250 million barrels of Russian crude oil and petroleum products. Now, of course, with that pricing and with that money going into the Russian war chest, we have the situation that we have now. What does this mean for the consumer? Obviously, it means extremely higher prices from here. With the way Brent crude oil is trading at this point, right around $118 a barrel, by the end of next week, there's a statistical probability we could be as high as $160 a barrel if the situation in Ukraine gets any worse.
Good evening, 9:32 p.m. Eastern Standard Time on the East Coast in the United States of America. I'm XRP Future Millionaire, and I want to thank everybody for tuning in. Everybody who was part of the class from 8 to 9 p.m. Eastern Standard Time. If you're interested in the classes or seeing the class right after, join Tom's Army, $9.99 a month. You get the free Telegram. You can only get that by joining Tom's Army. And once you're in the Telegram, you can get into the free classes. You'll know how to do it when you get there. And all I ask for in the class is after you watch it, or after you watch the live one, or if you watch it after, because it's available for 10 days, 60 seconds after the live. All I ask for is a $5 donation. Show me your appreciation for my time and work that I put in. And that helps me not have to charge thousands of dollars for classes and yada, yada, yada. I want everybody to see the classes. So the main thing is here, and I showed the crude oil thing in the beginning. We're going to stop to it in the middle, and at the end of this video, we're going to continue this interview, but we're going to do it in a spicy way this time so that we can go in and out of the video. So, right now, Bitcoin's at 39,478. We were talking about in the class, and I'm not going to go over everything we talked about, but we talked about how we could possibly have a bullish divergence starting in Bitcoin. But what would have to happen first in the 30-minute for it to even come through? You'd have to come through here with that red line. So we need that red line to come through the 50, which is the orange line, and we'd have to have that pull through. But right now, Bitcoin needs to hold 39,397 area and bounce up. Otherwise, this is going to break through, and we'll just end up coming through farther than we were on the rise up. This is going to be a straight to the point update. We have the 39,397. If that holds, I don't think it's going to be a matter of do we get rejected here. I think it would be a matter of do we get rejected there, or do we get up to that 40,000. This is how I think it's going to be, because like I was showing the class, we have to update our charts now because we've had some price action. So I have different levels of different things if you haven't seen an update since earlier, but I showed them and we updated it during the class on Bitcoin and a few others actually. So now that's what it's looking like for Bitcoin. So if we're going to have any kind of bounce, you know, we're going to need to do something here in the relatively short term. I don't think that's what's happening, though. That was just something that I was drawing out. So in case it bounced up, I could see us coming to that 40,667 and getting rejected. But like we were talking about in my class, the volume is fading. So I think this would be a failed push up, and likely the 100 would get us. But if not, we could come up to 40,667. But I don't really see much more on top of this unless we start seeing some volume. We could break down to a double bottom and then start kicking off some volume. But right now it looks pretty shady. There's still that chance that we come up to 40,667 and start creating a right arm here and then start flailing down like the other side. So is there opportunity? Maybe. But most of them we measured out are 5 or 6%. And it's not in this environment, it doesn't seem worth it. Algo was one of the ones we were really interested in. And you see the bullish divergence starting in Algo. It just started. XRP already finished one in the 30-minute. A very small one at that. But this, if it finishes, should get Algo, and we were talking about it. If this does it, bullish divergence like XRP did, minimum right there, but likelihood right here. So your minimum push from here would be about 3.95%, actually 5.46, or right in there, but you'd be looking for about a 10% push. The risk to reward here seems great. It seems like there's too much risk here because it so easily could fall through to the next level. So to me, and to everybody in the class, it was too risky, even if it does make a gain. So I'm just sitting on the sidelines and letting this play out. But yeah, that's an opportunity. And we'll get back to the last two that I want to do on the charts after we go through a couple more minutes of this video.
Stephen, from a market perspective, do you think that there's anything that the Biden administration or the government in general could do at this stage that would, I guess, temper some of the pain that Americans would feel from a move like this?
The biggest move would be to change the rhetoric with regard to domestic oil and gas production. In the President's State of the Union address, he talked a lot about renewables, and that's certainly not going to answer the question, especially in the short term. In that 1 hour long speech, 7,000 words, he did not mention domestic oil and gas production once. And still, in follow-up questions over the days past, they're still not addressing this issue. So throwing out an olive branch to domestic production and trying to get domestic production from where it is now, 11.5 million barrels a day of crude oil, to where it was pre-COVID, 13.1 million barrels a day. That is the quickest short-term response that the government can do. It's the only response the government can do that would have an impact.
Okay, interesting. What about the refining of that and some of the infrastructure that goes around it? How realistic is it that we can start making that an efficient use of oil?
Well, it certainly was prior, up through 2019.
Okay, so if you want to see the end of that, just wait until the end of the video. But I want to finish this. A couple more things. I just want to show you XLM real quick, and then DGB, and then I'm going to let you guys go. Well, XRP first, obviously. So XRP, we're being supported right now, we broke down and we talked about how we had a candle like this, and I told everybody, if you want this to go up, we would have our next candle would end up being a squeeze, which you're seeing right now with XRP. And then the next one, you want to see an engulfing. So it would equal that or greater and engulf this whole candlestick with the next one. And then it can do whatever it wants, but then it'll eventually come up out of there. That's what we're looking for. So right now we got a squeeze candle. Remember what we were talking about for everybody in the class? So there's our squeeze candle. And now if this one's an engulfing candle up, we're going to make some move up. And our next level is going to be about 77. And yes, the support resistance has changed for XRP. And if you were in the class, you know why. Because it's an ever-evolving board. So you've got to keep up with the newest price action. Otherwise, you're going to get yourself in some trouble because we're going to be basing our old support on the old area. So we got to make sure to keep our areas lined up. I'm not even deleting all that. We'll figure out that later. So right now we've got support down here at 74.021 if it breaks through here. But I don't even like that. I like the support right here. 75.269. Because if it breaks through there on the 20-day, it's over. And then we'll come all the way down to 69.537. The 72.222 is irrelevant right here for the most part. I think the 69.537 is the support. 75.250 or 75.269 would be resistance if we fall through. But right now we're trying to make that support. We would have overhead at 77.469 at the top of this cup that we would have to finish. And then the next real resistance in the area would be 80393, where I think we could get to. So if this plays out as a bull flag, that's likely the scenario we would go. There's not much here, though, that would make it worth getting in for about a 7% gain, if that. XLM, it's the same thing. It makes me interested because you can see, with XLM especially, and these are the kind that I kind of like to take a chance on, it's bending around, and then it did the W down here. So if I was ever intrigued about any of these, look how XLM did this. It's bending around. And Algo is interesting too. They're all interesting, but it's just a matter of your risk tolerance. And there is no volume, guys, on the kick volume, so that's what makes it hard. Like, and we're having a hard time on the 20-day. But I mean XDC, not XLM, but XDC. I don't know why I said XLM, but XDC is coming around. And you can see this. If it holds, you're probably going to get a kick here at minimum. There's just no volume. That's the problem. But yeah, that's about a 10% kick. But if it pulled up and the market supported it, this is one where the way it's rebounding, this could be one of those rebounds that come all the way up here for 15%. So that's a possibility. XLM. Remember yesterday we drew out and we thought it could come up there, or maybe this was earlier today. I drew it out sideways because I thought we'd get a retest and, you know, come up. But that's the point. We thought we could come to 18.5 and we'd probably be capped out. It still looks like that's the possibility that's playing out right here. So we've got support at 17.8, resistance at 18.52, and we've got underneath support at the low end at 17.19. We've also got resistance above right here. I don't know how this, I'm measuring it up like that, even though we could do it up there, but we've got to get through a few levels first. So that's how we're looking with there, and then we're going to end with DGB, and I'm going to let you guys go with the video at the end, you know, the third part of this video. And then with DGB, we're right up on the 1910 resistance support. You see how the 20 days coming right up there? We just started a bullish divergence. So if this completes and DGB has to come up, DGB would actually be an interesting one because watch the difference in price. If it came up here, you're getting about 10. If it comes all the way up to here, 12.5. But more than likely, you could come up here because you'd have to finish it through here. So you'd be looking about a 7.5 to 11% if this is not just a fake out. But you see how it's starting to round down a little bit on this 20-day in the red. So that's something to pay attention to. Make sure to turn that bell notification to all so you can get my future content when it first comes out. Subscribe to the channel as we're approaching 8,000 subscribers. We just went over, I believe, 7,600 subscribers, which is 76 or 7,500. I don't remember. It's going quick. Maybe even more than that. And also, consider joining Tom's Army for $9.99 a month. We've got 263 members of Tom's Army, which is an all-time high. I can't even believe it. And when you join Tom's Army, you get the exclusive Telegram. You get, there's 256 people in here. We talk about this. So even between my updates, like they're showing, like the bear pennant we talked about, but this is what we're talking about. Like, they talk. We talk about a lot of things, guys. And if you join Tom's Army for $9.99 a month, the most important thing is you get the classes for free. Just like this Telegram's free, just for joining Tom's Army on YouTube and supporting me. There's 263 members of Tom's Army, 256 members in the Telegram. And with the classes on Tuesdays, Thursdays, and on Saturday as well, we just had one 8 to 9 p.m. Eastern Standard Time. So that's Tuesday, Thursdays, and Saturdays. Those are free. All I ask for is a $5 donation at the end of the 1-hour class. Or when you watch the class after, it's available 60 seconds after it ends. And it's available for 10 days. So if you go through and watch them, all I ask is a $5 donation at the end of those class sessions so that I can keep it free and everybody who needs to be in here can watch it. You don't have to go pay some douchebag on YouTube thousands of dollars. I'm going to do exactly what you need to see for free on every step of the way, just for supporting me on YouTube by $9.99 a month. Stay blessed, everybody. Hashtag be better, do better. Hashtag FUD Assassins. And remember, help one person each and every day, because if I don't do my part and you don't do your part, who's going to do their part? And what kind of world would we have left? So now let's finish this out just like this with this third part of this interview.
Beginning in 2019 and through 2020 and through the start of the COVID mitigation protocols. So the capacity certainly is there. The concern now, of course, is that perhaps the pent-up demand will even exceed what's been demonstrated capacity to the market. That is to say, the COVID mandates have essentially gone away. So you're going to see a tremendous amount of demand. Once the weather warms, the travel season begins, demand for gasoline begins. We already have gasoline that's trading, retail gasoline that's upwards of $3.73. If prices remain, crude oil prices remain this high, national average is going to be pushing up $4 going to the summer, then add another 30 cents to that, because in the summer, the market has to be supplied with summer-grade gasoline, which is a blended gasoline, which is more expensive. Yeah. So more expensive gasoline, greater demand. We're looking at higher prices, not lower prices. prices in the months ahead.
Is the capacity there, though? I mean, I was looking at some of the capacity data we have in the Bloomberg terminal earlier this week, and it looked like generally we're running kind of in the high 70s in terms of our current capacity utilization here. If that is where we stand at the moment here, where does, I guess, an extra 20% capacity get us with regards to keeping prices in check?
Yeah, so with capacity now, we're in what's called the turnaround season. So this is the maintenance season. So this is the time that the refiners ramp down production. They go ahead, they refuel, they retool, and so forth. But in the months ahead, that capacity utilization rate will go up, and we've seen it as high as 95%. So right now, we are at a seasonal low, and you go into a seasonal low as far as manufacturing oil because demand is at a seasonal low. But as we both go ahead, once we get in, and the refiners have to start buying more crude oil to run to ramp up that capacity into the 90% range, that's a lot more demand that's going to be coming to the market as we approach the 4th of July holiday.